Welcome to the January 2nd, 2019 edition of the BitcoinNews.com Daily Podcast, where we cover the biggest stories of Bitcoin, blockchain, and cryptocurrency every single day. Well, today's kind of a special show. It's been 10 years now since Bitcoin launched. This is actually recorded on the early morning of January 3rd. 10 years since the Genesis block, the first block of Bitcoin that Satoshi Nakamoto mined himself, and then he kept mining. And he mined like 1 million Bitcoins after that. But this is like a monumental event. Bitcoin has been alive for 1 decade now, for the first time. And in the Genesis blog it said, the times, January 3rd, 2009. Chancellor on the brink of second bailout of banks. Well, basically, back in January 2009, it was in the midst of a horrible financial crisis that brought the world to its knees called the Great Recession. It started in 2008, the global stocks crashed unbelievably badly. And it wasn't just stocks, it was like everything. Banks were going out of business, big corporations were going out of business, and then the government started to bail them out. And the government called it quantitative easing, QE. And what they did is they printed trillions of dollars to bail out corporations, to bail out banks. And the corporations and the banks were the ones that caused the financial crisis. One of the big things was subprime mortgages. Subprime mortgages were basically mortgages that were unlikely to be paid from people that took out mortgages because the credit situation back then was crazy compared to today. Nowadays, you can't take out a mortgage in the United States unless you already pretty much have the money for it. Back then, you could just kind of have a job and decent credit and get a mortgage for a huge house, and everyone was doing that. But then, as the economy started to slow down in 2008, when the stocks started crashing, businesses started losing money, it created such a bad feedback loop where, the stocks were crashing, people were losing their money in their retirement, their 401ks, and then they weren't paying back their mortgages anymore. And a lot of the assets on the stock market was subprime mortgages, bad mortgages bundled together. And they were selling this to everyone. Like, if you went to your financial advisor, they'd be like, hey, we got a great deal for you. You can get like 5% per year if you buy this fund. And they wouldn't really tell them what it is, but it was actually a bunch of bad mortgages packaged together. So people's 401ks got absolutely obliterated. Their retirements got obliterated. And the companies that were doing that would have collapsed. Like the banks and corporations that facilitated the bad debt. It wasn't just subprime mortgages. There was all sorts of junk bonds that were an absolute contagion in the economy. And these companies that were distributing them and selling them and making money off of them would have definitely collapsed. But then the government bailed them out with trillions of dollars, called QE. And by printing trillions of dollars, they caused inflation that made the dollar itself devalue. So everyone ended up paying. Like all the people that got hurt in the first place by the financial markets crashing, they lost their 401ks, they lost their retirements, they lost their jobs, they lost their homes. They also lost the money they had in their hand because the money in their hands was losing value from printing trillions of dollars. And that's probably why Satoshi Nakamoto created Bitcoin. Bitcoin is a form of money that is decentralized. You cannot print it at will. There is printing of Bitcoin, but it's called mining, and there's only a set amount. And after 21 million Bitcoins are mined, and that's going to be about in the year 2140. By the way, already 17.5 million Bitcoins are mined, so there's not much mining left to go. So you can't print Bitcoins like the government prints dollars. And therefore, people can't lose the money that's in their pockets, in their banks, under their bed. Like, literally, you could store your cash money, US dollars, under your bed. You will lose money each and every year. A lot of it. The inflation rate's 2.5%. And it was much higher than that during the financial crisis of 2008. But here's the thing. I read this, I did some research on this thing called the Chapman Index. And basically, this guy found out that the CPI, which measures the inflation in the United States, is like totally cooked. Like they're cooking the books, which means they're manipulating the numbers and make the CPI a lot less than it should be. Because the CPI is used to adjust government workers' wages each and every year. So if the CPI goes up 2.5%, they got to give the workers a 2.5% pay raise so they get the same amount of purchasing power from their salary every year. But here's the thing, the real inflation according to the Chapman Index is like 10%. And that's how it's been for years and years. So everyone's like that's working and getting CPI based and pay raise every year to account for inflation. They're actually losing their purchasing power by like 5%, even up to 10% in some cities every year. So people are working at the same jobs, doing the same amount of work or more, and they're getting paid less and less every year in reality, even though their paycheck went up a little from the CPI raise. The real inflation might be higher than the CPI. But anyways, back to the point. They've been printing lots of money, and it's continued. It didn't stop in 2008. They said, this is temporary, we're just going to print some trillions of dollars, save the banks and corporations, save the stock market, end the crisis. What they did ultimately is they bailed out the rich people that were destroying the economy with their greed. The economy needed to collapse. It needed to get rid of those people, needed to get rid of those corporations and banks that destroyed it in the first place. Instead, they're all here today. And they have big businesses, and they're doing the same things they were doing because the bailouts continue. The trillions of dollars of money printing never ended. Oh yeah, that crash in the background was the financial crash that's about to happen. Anyways, so the money printing never ended. The trillions of dollars is still being printed every year. The U.S. government debt goes up by over $1 trillion every year. They miss their budget every year. It was supposed to be less than $1 trillion increase this year, in 2018. And it ended up being like 1.4 trillion, something crazy like that. And it's just getting worse and worse. So they're printing tons of money. And Bitcoin solves this problem. If you hold your money in Bitcoin, yes, Bitcoin is volatile. Yes, the Bitcoin market is manipulated by CME Bitcoin futures made by the same people that probably destroyed the economy. So they're trying to hurt Bitcoin. But the reality is Bitcoin will gain value relative to fiat long term. It will. And if the fiat ever collapses from the trillions of dollars of money printing hitting the fan, and how could that happen? Well, let me tell you how it could happen. Well, let's say there's a big financial crisis, kind of like, the stock market went down 4,000 points since October, the Dow Jones. The global stock markets are on the precipice of a bear market. A technical bear market is 20% off the highs. It's already there. Why is 20% important? Well, if it's already down like 20%, it causes a feedback loop where corporations and banks start collapsing. Well, here's what they're doing, though, in the stock market right now. The stock market was really crashing before New Year's. But then they started to do QE. They're buying tons of stocks with money they're printing. And there's two ways they're doing this. Well, the banks have collectively decided to buy like $100 billion of stocks all at once to make it go up for a few days. And that's what they did. So they moved people's pension funds, which is like the retirement, into stocks. Right when the stock market is collapsing, there's all these indicators saying the manufacturing is going down, the trade's going down, the currencies are weakening. Yet they put everyone's pension fund into the stock market before New Year's, just now, to make it go up for a few days. I mean, this is the sort of behavior that ruined people in 2008, and now people foolishly are letting themselves get ruined again. I mean, after witnessing 2008, I would never even buy a stock ever in my life, but people will still put their entire retirement into the stocks, into the pension funds and whatever, and they just put all the pension funds into the stock market, over $100 billion worth. The big banks like Wells Fargo, They're on the plunge protection team, the PPT, and whenever the stock market gets bad, the president could call them and be like, hey, buy some stocks now, make it stop going down. Here's the thing, it's like a temporary patch, it's just like QE. And basically what's going to happen, let's say Wells Fargo loses all that money they put in just now, it was $64 billion from Wells Fargo alone. They could probably just call the government and be like, hey, I need a bailout. And they'll be like, yeah, we did a bailout in 2008, you paid it off, we'll do it again. So basically, it all comes down to massive money printing. Another thing they're doing is there's this thing called the volatility index, the VIX, and you can actually short and long the volatility index or something. And the Feds, like the Federal Reserve Bank, has a system where they can make the volatility index, the VIX, crash from wash trading. They wash trade the index and slam the price down. And when the VIX drops, automated trading bots start to buy stocks. And that's another way to inject billions upon billions, tens of billions, hundreds of billions of dollars into the stock market at will. And by the way, here's an interesting thing I read. Most of the stock market now is automated trading bots. And that was all fine and dandy when the stock market was rising from 2009 to now, until October 2018. That was great, but now everyone's complaining about it because it's causing the stocks to go down faster. So the stocks went up faster than they should have because it's all robots doing it and they go extremely fast. And now that the stocks are crashing quickly, they're blaming the robots, even though the robots are the reason it went up so much. Alright, so I don't want to get way too off topic here. Basically, to sum up, it's really interesting. 10 years later, Bitcoin launched during the Great Recession. It was launched because of the horrible money printing. Bitcoin's a version of money that cannot be printed. It's safe during this sort of crisis. 10 years later, the crisis is back. The 2008 Great Recession never ended. They've been printing trillions of dollars to keep it at bay, but they can only do so much. The This year, 2019, we're going to see every trick in the book pulled out by the government. They're going to print whatever they can. They're going to bail out whatever they can to keep that market afloat. Like right now, the market should be crashing thousands of points below where it is right now. And the stock futures right now this morning, the morning of January 3rd, they're like 400 points down on the Dow Jones. But I bet, based on the past days, they'll probably go up. Like, it'll probably go down 400 right at the open. And then, boom, like an hour or two later, it's going to be in the positive from all the manipulation going on. It's overt market manipulation, but people want it. People are demanding it. The investors, the people that hold their retirements in it, they're demanding the manipulation. Here's the thing. You can't do it forever. It's just going to be worse when it all falls apart. So, 10 years later, the purpose of Bitcoin, the reason Satoshi Nakamoto created it, and it can be seen in the Genesis block. Once again, he put in the Genesis block on January 3rd, 2009. The Times, January 3rd, 2009. Chancellor on brink, a second bailout for banks. It's happening again 10 years later. Really incredibly interesting. I don't think it's a coincidence. This is why Bitcoin was created, and the problems that caused Bitcoin to be created in the financial system were never fixed. They just got worse. The global debt bubble has absolutely become hyper bubble. Like, and it needs to pop. And that hasn't popped at all yet. They're increasing the debt. People are sucking up the bonds from the Treasury, from the United States Treasury. They think the bonds are a safe haven. Oh, here's the thing. How will the dollar collapse? Well, if we see a real global stock crash like 2008, like right now, it'll probably be worse because, you know, they kind of like propped it up when it never collapsed all the way to where it should have. It never collapsed and then got healthy again. It just like they propped it up with pretty trillions of dollars was stole from everyone. Well, they're going to go back to pretty trillions of dollars as the stocks crash. But this time, you know, it'll cause inflation. It'll cause some really bad inflation, and then Bitcoin's suddenly going to look really nice. And it could even get so bad, it's possible the dollar could collapse. I mean, that would be like a really extreme scenario. No one believes it could happen. Besides maybe me. I have a strong instinct that in our lifetimes, maybe soon, you know, the dollar could really weaken rapidly like what happened in Venezuela. Because they don't really care about the citizens. They've made that clear. They just care about, you know, getting the money they need. So they'll print whatever they need to keep their lifestyles afloat. Alright, so that's enough ranting. One more interesting thing. BitMEX, which is the largest Bitcoin derivatives exchange in the world, they bought an ad on the front of the Times, the same paper that Satoshi referenced in the Genesis block, the same newspaper. They bought an ad that says, "Thank you, Satoshi, Bitcoin 10 years later," something like that. So 10 years after Satoshi published like the title for the Times into the Genesis block of Bitcoin, they bought an ad on the front page of the Times. And they put a hash to a block, like a recent block that says, "Thanks, Satoshi." So that's all really interesting. It ties it all back together, huh? Alright, so into the market analysis. Bitcoin was trying to rally yesterday, or like January 2nd. This show is for January 2nd, but on the very early morning of the 3rd. So Bitcoin rallied all the way to 39.20, but there was a problem. So when the CME Bitcoin futures closed on December 28th, they expired basically. That was the last day for trading. That was the day that set the profits and losses for the traders. So they expired, and then the price of Bitcoin kind of shot up to 3,900 and stayed there for like a day. And during that day, that's when the CME Bitcoin futures traders took out their positions, apparently, based on what's going on. Because Bitcoin tried to rise above 3,900, and it could not. It met very strong resistance. The stock markets are doing very bad. The foreign currency exchange, like the dollar weakened a lot overnight, by the way, like by a few percent, which is like crazy for one night. And so Bitcoin should have shot up, and it tried to. So Bitcoin went up on the 2nd from... Well, it started on January 1st. Bitcoin was as low as 36.30, and then it had some nice recurring candles. And then throughout the 2nd, it rallied all the way to 39.20. But then, boom, strong resistance. It could not exceed 3,900 for long. And right now, Bitcoin's at 38.50. So basically, just to sum this up, the CME Bitcoin futures traders likely took out short positions right after the December 28th expiration. And they could choose to go long or short for the month. They kind of work in unison. It's pretty obvious that they can decide, hey, Bitcoin's going to go up this month or Bitcoin's going to go down. That's the effect of these Globex CME Bitcoin futures. They really do have strong control of the market. And to put it in perspective, they control the gold market with Globex on COMEX in New York. And that's a $10 trillion market. And they could control the gold market with their futures. Well, Bitcoin's like a $70 billion market. Like, let me see, it's probably less. $68 billion market for Bitcoin. So it's so easy to manipulate for them. And they are. So they decided this is a short month. They took out their positions at 3,900 on December 28th. And unless there's like a massive, overwhelming pressure for Bitcoin to go up, like they're probably going to keep that short position going. Like it's been about 5 days now since the shorts positions were taken out. Bitcoin tried as hard as it could to break through 3,900. It could not. I will be surprised if Bitcoin goes above 3,900, and if it does, so watch the 3,900 level. That's what I'm saying. It still could go long for the month. Like, they could change their mind now and be like, okay, we're going to buy long positions. Short was a bad idea. The stock market's going down. Bitcoin has to go up because Bitcoin's a safe haven. They could decide that, like, you know, kind of like we know. That's already true. And they could just take out long for the month. So 3,900 is the number to watch. If Bitcoin could go above 3,900 consistently for like a few days and go way above it to like 4,000, 4,200, 4,500, then this is a long month. But if Bitcoin keeps hitting 3,900 and declines, it's not going to go above that level. I mean, so, and it could retest 3,100, which was hit in the middle of December. So it could even go down to 3,000. So basically, watch that $3,900 level. This next couple days of stock trading is going to be critical. If the stock market's allowed to crash like it should be, then perhaps the CME traders will change their position and go long. But if the stock market keeps being manipulated, and it probably will be, they could just like hammer the VIX down, cause the bots to buy stocks. They could tell Wells Fargo and all the big banks to buy more stocks. And yeah, the stock market won't go down. No matter how bad the futures are in the morning, the stock market will miraculously go up during the middle of the day. So that's what's been going on. If that continues, I think Bitcoin's going to be down this month. If the stocks are allowed to crash like they should, I think the CME traders would probably change their positions and go long. So let's watch that $3,900 level. Alright, so how about the rest of the crypto market? Well, Ethereum has surpassed Ripple. I believe we mentioned this on the last show. And if we didn't, it has. And it's about a good $800 million ahead of Ripple as far as market cap goes. Ethereum has a $15.7 billion market cap. It's around $150. It's a little down now, though. Like, let's say Bitcoin doesn't go above 3,900. Ethereum might keep rising a bit. You could even have a bit of a rally because it's going to fork in like 10 days or so. Less than 2 weeks, the Constantinople hard fork is coming. And Ethereum will probably rally based on speculation that they're slashing the inflation rate for Ethereum. They're lowering the block reward from 3 Ether to 2 Ether. They're also adding a bunch of new features. But then when the fork actually happens, it could be bad. The community could be fighting. The miners could split off. Especially if it's a bear market. Like, let's say the market's going up a lot. Let's say Bitcoin breaks the $3,900 level and runs away into an up month. Ethereum will be fine. Let's say Bitcoin starts crashing right now. Let's say the stocks don't go down at all, despite everything going on, and then Bitcoin's crashing because it's a short month and they decided to short, and they can make it go down. They have enough influence to do so. So, if it's a bad month for Bitcoin and the whole market's declining, then Ethereum has this fork, and it's a bad fork, and people are fighting over the mining, like the miners split off, make their own version sort of thing. Ethereum could be in some serious trouble. So we got to watch this closely. Like each and every day I'm going to be watching Ethereum to see what it's doing, because how much it gains before the fork will be important to how good it will survive when the fork happens and after the fork. So Ethereum really needs to keep on gaining. Even though it's like way up, it'd be good if it goes over 200 to 300 or something. I mean, that's probably not going to happen, but it really needs some padding and some insulation for when this fork hits, because it's going to crash probably no matter what. There's probably, at the least, it's going to be like tension in the Ethereum market and in the Ethereum community. At the worst, it'll be like a full-on war, like with Bitcoin Cash. By the way, same thing with Bitcoin Cash. Bitcoin Cash went up a lot. It went up over $600 before the fork, and then after the fork, it went down to below 100. Right now, it's at 165. It's never really recovered from that. Hopefully, Ethereum doesn't have the same issue happen. Ethereum's the best cryptocurrency and blockchain platform for launching DApps and using smart contracts. And it would be a big shame if Ethereum gets dragged through the mud from this fork. Well, that's all we have for you today. Just remember to watch that $3,900 level. If Bitcoin could break above that and keep going above it, this will be an up month. If it can't get through it, and so far it hasn't been able to get past 3,900, it's probably going to be a down month. So yeah, we're going to keep updating you on that, and go to bitcoinnews.com 24/7 for the full spectrum of Bitcoin, blockchain, and cryptocurrency analysis. This is your host, Space Marine, signing out.